Support for CFO thought leader comes from Ledge and US Bank.
Hi, this is David Quinn, CFO of Bluevine, and you're listening to the CFO Thought Leader podcast.
This is episode 1053.
Tools that we're implementing right now that are going to allow all of my finance team to work on the same platform with the same processes, so that there is complete visibility and transparency in terms of what the business is doing. The idea is to build that framework so that we can support the growth to that 2x number that I talked about. So to answer your first question, which was, am I going to reorganize the finance team? No. My objective in life in general is, if it's going well, don't change it. Like, don't change things just for the sake of change. That doesn't make sense. Figure out how we can free up resources within the finance team by implementing these systems and processes, and then reuse those resources to do something that is more value add.
Hi, it's Jack. On today's show, we speak with Cyrus Lam, CFO of Orion Innovation. For Cyrus Lam, the aspect of the CFO role that sets it apart from all others is the weight of non-negotiable priorities. Despite years spent closely collaborating with CFOs as an investment banker, Lam tells us he quickly discovered a new level of accountability in the role, managing cash flow and ensuring payroll. He says were unyielding priorities. While this hands-on responsibility was not unexpected, Lam says he's learned to enthusiastically embrace it, finding enjoyment in understanding financial details down to the last dollar. You'll hear that story and much more on today's episode. We'll begin after this. Are you tired of manual, fragmented, and time-consuming expense management processes? Then the US Bank Commercial Rewards Card might be right for your business. More than just a card, it's an all-in-one card, expense, and travel management solution that replaces outdated expense management methods with a single intuitive platform. Specifically designed to scale with your growing business, it provides the control and real-time insights into spend that you need. It integrates with your existing tools, lets you set custom spend policies, captures all expenses automatically, and liability is kept at the corporate level. Employees can even book travel right in the platform. You also get to choose your rewards, either points or rebates, all while saving money with no annual fee. So why wait? Manage your cash flow better and streamline your business operations today with the US Bank Commercial Rewards Card. Visit usbank.com/CFO to learn more. Hello, we're speaking with Cyrus Lam, CFO of Orion Innovation. Cyrus, welcome.
Thank you, Jack. How are you doing?
We're doing well, and we're looking forward to speaking with you here. We're wondering, what were those career experiences you feel prepared you for a CFO role? I want to alert the audience that Cyrus had 26 years at KPMG, and he was a distinguished partner there for a good long time. We would love to go back in time and just hear you tell us what you think some of those special experiences were that prepared you to become a CFO eventually. What comes to mind?
Yeah, I mean, firstly, thanks for having me on the podcast. I truly appreciate it. This is a privilege. Actually, the first podcast I've ever done, so a good one to get going with. So thank you for that. Look, from my experience, I've worked with, as you said, I worked in investment banking for a very long period of time. And as you work in investment banking, you work with CFOs pretty closely, right? So you're constantly, every deal you do, you engage with the finance team at the company and you engage with the CFO. And what I found is there's many paths to getting to the CFO role. And there's the traditional path, which is you kind of do your CPA or your public accounting for a couple of years, and then you join a company, and then you grow through the ranks and you become the CFO. And I kind of scrapped all of that, right? I skipped all of those stages. I did do my public accounting, and I'll talk about that in a second. But I was more focused on investment banking as a career for me. And one of the last clients that I worked at wanted to hire me as their CFO, and that was a transformational move for me. But just stepping back for a bit, just giving you the journey, if you like, without boring you too much. It was basically 3 transformative things that happened in my career, and I kind of look back at that, and I always think about how things could have been different, right? As we all do, I'm sure. But it was 3 things that really changed my sort of positioned my career where it is today. One was growing up in India, which is where I sort of grew up, studying chartered accountancy, which is, if you don't know, your readers don't know, is the equivalent of a CPA. It's very popular in the UK, in Australia, and of course in India. So I started working as a chartered accountant, and in order to do that, you have to get a job. You can't do your CPA, you can't do your chartered accountancy without doing what is called articles. And that was back in 1994, or 30 years ago, actually. And KPMG had just set up operations in India back in the day. I got a job with them. I was the 3rd person to join them as an article clerk, the first one to qualify as a chartered accountant. And, with that comes lots of opportunity, right? You join a growing organization, essentially a startup, and you get given a lot of opportunity. And if you're capable and hardworking, you move up in the ranks. And that kind of helped me move expeditiously through the ranks in KPMG India, to the point that I qualified as a chartered accountant, moved into investment banking, continued my trajectory upwards in India, and then I was offered the opportunity to move to the UK. So that was, I would say, the second transformative thing that happened. One of the sectors that I'd always been super interested in was technology for all my life. I mean, if we could probably do a 1-hour podcast on that, just that topic. And I love everything to do with technology. I'm passionate about it. I love figuring out how things work. Much to my parents' dismay, I would dismantle a lot of equipment that they would buy, try and put it all back together. So it was always interesting for me. And I got this opportunity to move and work in our TMT group in the UK. And I grabbed it with both hands, moved my family and myself over there. And again, same thing, work hard, focus on the market, and keep in mind, this was in early 2000s, so just before the 2001 TMT bubble burst. But I kind of stayed focused on that space, built a reputation, and worked in the UK for about 7 years, focused purely on technology companies, and even within technology companies, purely on IT service companies. So as an aside, that's kind of what Orion is right now. And in that time, I started working closely with our US colleagues, KPMG US colleagues, and they would fly me out to the US to really help them on services transactions that they were working on. And I thought, you know what, why not see if there's an opportunity to move to New York? So that was the I guess, the second part of that transformation. And I relocated to New York in 2006. With my family. I had a 1-year-old and a 3-year-old living in New York City, doing investment banking for KPMG. And this was all middle market stuff. And it was a really successful time of my career. I grew, as you said, into essentially not a partnership role. It was a managing director role, because that's what happens in the corporate finance team at KPMG in the US. But it's kind of equivalent. Grew to MD, and then subsequently grew to head the global TMT corporate finance team for KPMG. And then one of my clients, a company by the name of CDI, was going through a transformation themselves. They wanted to get some external funding in. The founder of that business wanted to step back, and I helped them find a private equity firm to come in and do a majority recap. And the third transformation happened when the founder of CDI convinced me to join the company as their CFO. They already had a CFO. He was more of a private company CFO, did a great job bringing the company to where it was at the time of the transaction. But we had big ambitions for CDI. And so they wanted to bring someone else in. Clearly, they picked the candidate with the least, or actually no, experience in running a CFO organization, but certainly knew how to generate value for companies and knew how to position businesses. And so that was the third sort of career step. And really sort of the overall philosophy, the way I sort of think about a CFO role, or for that matter, any management role, it's really about the people, right? Most CFOs, maybe some do, but most CFOs aren't hands-on in NetSuite or in the ERP tool. They're kind of guiding the team. They're setting the stage. They're looking at, dealing with stakeholders like the lenders, understanding how the business can grow, how to improve overall profitability. And that's kind of what I always wanted to do, and really help my people have a path that they could thrive in. And the philosophy that I have there is you always have their back, right? And I would tell this to all the folks that came in and worked with me, alongside me. It's not about me, it's about us. We will either win together or we lose together. And there's never a time ever that I will ever throw you under the bus. That was my biggest pet peeve. Sometimes it happened to me, which is why it was a big pet peeve. And, behind closed doors, we introspect and figure out what went wrong and fix it so it doesn't happen again. But externally, in front of my stakeholders, in front of my management team, if anyone's fault, it's my fault. So that was the sort of, that was the career journey, if you like, that brought me to where I am. We sold CDI back in February of this year, and Orion Innovation, the company where I'm the CFO right now, is owned by the same private equity firm, and they had a similar sort of CFO dynamic where they needed someone to come in. And here I am.
Wonderful overview for us. I would like to understand better this entity, this part of KPMG. Can you just describe it better for us, the corporate finance group? Did they grow it during your tenure there?
Yeah, I'll happily give you that. So here's not the dirty little secret, but the big secret that no one really realizes, especially people in the US. KPMG has an investment bank within the organization. And it's called KPMG Corporate Finance. Essentially what they do, Jack, is the same thing that a middle market investment bank in the US would do. So like a William Blair or a Guggenheim or any of those companies. And what that is not due diligence. It's not M&A tax. They have teams to do all of that. It is pure lead M&A advisory. So FINRA certified people working within an organization that is regulated. It's a broker dealer in the US. It's a broker dealer in London. It's different. And from when I was there, it was the biggest firm doing investment banking by the number of deals. So we would do, again, I remember the spiel because I used to pitch it. We would do anywhere from 400 to 500 deals a year. So if you think about it differently, it would be like a deal a day. And if you think about that level of volume globally, the way we differentiated ourselves at KPMG was a global platform that did mid-market deals, where if you wanted to get a buyer from Singapore, for example, but you were a local bank out of Chicago and you didn't have a global presence, it's kind of tough for you to do that. For us, it was pick up the phone, call the partner in Singapore. He or she may or may not have a relationship, but the company, the KPMG firm, would 100% have a relationship, leverage that, and get access. So that was the piece that I worked in. It was lead investment banking.
When you first joined KPMG, did this happen? Did you join this entity, the corporate finance entity, 7 years into your KPMG chapter, or did it happen sooner?
It happened a little bit sooner. So I think I mentioned I joined as an article clerk. So essentially had to do my chartered accountancy. That involved 3 years of basically working and passing accounting exams. Once I got my qualification, so while you're doing that, you have to do audit. You cannot do anything else, at least back in the day. And so I was an auditor for 3 years. I audited some of the bigger banks. At that point in time, I was in charge of a bank called ANZ Grindlays. I don't know if you've ever heard of it, Australian bank. Subsequently became part of Stanchart, fairly large actually in India, then HSBC, and most recently, or I should say before I've changed from audit to corporate finance, I was the manager on the Citibank audit for India. So that was a pretty big transformative one. And I wanted to do that. I mean, I liked audit, to be honest. I never found it boring. I found it quite interesting, which is not what everyone feels. And the transformation or the move to corporate finance was really because that was just something a little more interesting to me. Helping people exit businesses, value companies was a better fit for what I was interested in.
want to try to think back to who you might have been back then, because you talked about your love of technology and what have you. You were never tempted by .coms. Back then the headlines was filled with how much of the talent was leaving so many of the accounting houses and investment community to join .coms because of the opportunities. No, that was never on your radar. I really am interested what kept you there. There were recruiters who constantly called you, and it was always no. What does this tell us about you?
Hopefully something good, and I'll explain to you why. So the reality of the situation is I was born in India. Moving to the US without a path to get you there, or without studying in the US, makes it tricky to get a visa and to work here, right? So you got to look at the path that allows you to move where you can move legally, hopefully, and get to the outcome that you eventually want to get to. Now, what happened in reality is I moved into our corporate finance team, call it in 1997, and essentially worked on anything that was available, right? So I did valuations of a auto harness business, right? Completely off-brand in terms of what I do right now. I did a distressed debt for a onion dehydration company. I'm just giving you some random stuff. But I also worked on some technology deals while I was in India. And really, the transformation to working for technology companies happened when I moved to the UK. And yes, I wasn't employed by them, but I would work solely with tech businesses, right? So whether it was a software company based out of Leeds that we sold, or whether it was actually a satellite business that was trying to build a satellite telecommunication network, back in the day, this is pre-Starlink and everything else, it was allowing me to touch technology in a much broader form than it would have allowed me to touch had I just joined one company, right? Had I just joined an IT services business, and allowed me to engage with those tech companies at a much more strategic level. So typically you're talking to the CEO, the founder, the private equity firm of a software business one day, and then of a IT services business the next day. Hopefully the third day you're doing it with a value-added reseller. And so it gave me the exposure that I was looking for without necessarily needing me to commit to anyone, if I can say it that way. And so I was quite fulfilled. I enjoyed what I did. I loved working with my clients. I actually still have very good relationships with a lot of the clients that I worked with maybe 10, 15 years ago. And so it allowed me to do everything I wanted to do, and was pretty well remunerated for that. So I had no complaints. I had no desire to leave. I used to manage my book of business just like any entrepreneur would manage his or her book of business. It was an eat what you kill kind of environment, and I thoroughly enjoyed that. So I had no deep desire to move, because it gave me, working in the TMT group, leading the TMT group, gave me access to all the companies that I wanted to work with anyway. And the passion that I have for technology is not necessarily doing the numbers for the technology company. It's really understanding how that underlying technology helps other companies or other people, how I should use technology differently. And my role at KPMG perfectly well allowed me to do that. And KPMG is a pretty big leader in using technology internally, and also developing technology for companies to use.
We hear from different finance leaders who, of course, had a chapter at KPMG. But, as long as you were there, and I'm going to continue to emphasize this, you have a better sense of the culture there. Is there something that sets it apart? And again, you were kind of in a unique arena there, I would say. But at the same time, it's clear that you felt it was a great place to be. Why? What in your mind, as you talk to other professional peers that grew up or advanced in different organizations, is there something unique about KPMG in your mind, or not really?
No, there's definitely uniqueness about KPMG. I don't know if it's unique relative to the Big Four. I've never worked in the other Big Four, but I can tell you KPMG's culture is very collaborative, extremely collaborative, which is the way I operate. I don't believe in gatekeeping things. It was an aggressive culture, but also a collaborative culture. So Clients enjoyed working with us. We got them results, but we did it in a very ethical way. We did it in a way in which we felt good about what we were doing. And if I needed help from a partner that was completely unrelated to me picking the phone up to that person, I would get a call back and I would get a response back from them. And I've continued to use KPMG more as a client now. In fact, they did a lot of work for me while I was at my prior company.
Well explained. Thank you. We want to ask you about Orion Innovation, but first, curious, you joined just last summer in 2024. Was there a recruiter involved, or is this part of your network, or could you share with us how you made the segue?
Yeah, sure. Happy to do that. So the straight answer is no, there was no recruiter involved. Orion Innovation is a private equity owned business. And the private equity firm that owns Orion is the same private equity firm that owned my previous company. And so I'd been dealing with them for 4 years. We had a very successful growth story at the earlier company, an exit there. And so, as we were going through the process of closing that previous transaction, they had approached me and asked if I would be interested. I had multiple other options to look at, and I did look at them. But at the end of the day, my whole view in life is you got a few years right on this planet. So you got to work with people that you like and enjoy, and that have your back. And it's not necessarily always about squeezing that last dollar, or it has to be about enjoying yourself while you're on that journey. And I feel we had a really good run with the private equity firm that I was at, and saw no reason not to continue it with a different one of their portfolio companies.
All right. Well, thank you. I'm laughing because somewhere there's a recruiter who has lost a lot of money by watching you advance in your career, Cyrus. Tell us about Orion Innovation. What is this company about? What are its offerings?
Yeah. So Orion is a technology firm. But there's, a gazillion technology firms out there. So I like to sort of break things down into simplistic things. The way I would probably explain it to, my parents, for example, who are in India right now. Essentially, if you think about any business, technology is going to impact that business. The fact right now, Jack, that we're doing this over particular software, I forget what it's called, but it's pretty clear. It's going to go out. It's going to be recorded clearly. And the fact that I don't have to travel to you, or you don't have to travel to me, or we don't have to set up this whole thing, is technology, right? It's transforming the way your business operates, and you can generate productivity at your end. It's the same thing whether you're a golf cart manufacturer, I'm just making this stuff, or an airline, or you harvest blueberries. Technology in some way, shape, or form, hardware or software, is definitely going to touch you. And so the question is, how do you want to deal with that, right? Do you want to get ahead of it as a consumer? Do you want to be led by other people? And the clients that we work with are absolute, I cannot name them, but they are absolute household names. I mean, the group that listens to this podcast will know each and every one of the companies that we work with. These are either Fortune 100, Fortune 500, or private companies that are extremely large. And what we help them do is design and evolve their digital transformation strategy. So lots of words. What does it mean? It's the same thing. How do they figure out how they should harness technology, where they should harness technology, how they should use their limited resources? Because even though they're big, everyone has limited resources in terms of evaluating and implementing a technology plan, right? So what we tell our companies is there are a couple of things that we can help you with. One is, it's really developing software that you can use to digitally transform your business. So it could be that you were running a process manually, and you now need to run a process using technology. How can we help you do that? Think about airlines and how I'm assuming you travel a lot, your digital check-in process online on your app has evolved from 15 years ago or 10 years ago to now, right? It's completely transformed. It's become intuitive. It's become easy. On some airlines now, you can track your bags. Are they on your plane, or are they on someone else's plane? You can actually track when you land, whether the weather is going to be good or not. It requires a tremendous amount of integration. And it's simple to look at. The user interface is simple, but it takes a lot of back-end work. That's kind of what we do. We help these companies evolve these platforms, manage these platforms, and then essentially, if anything goes wrong with them, help them fix it. And so long-term relationships with customers on a trusted partner basis is what we do. That help?
That's a nice overview for us. Thank you. We know that it's currently you're owned by private equity, as you explained to us, I believe.
Correct.
But maybe you can share, what is the chapter that you're going to open for them here? You arrived just recently, and how would you characterize this chapter that you stepped into this finance leadership role? What's ahead?
That's a great question, because it's lovely to think about businesses in the form of chapters, because that is really how they work. So we had a chapter starting from like 2018, 2019 till early mid 2024, earlier this year is what I was trying to say, where we had done a fair amount of acquisitions. We had grown our revenue. We had quadrupled our revenue over that period of time. Similarly, grown our profitability, grown our employees from about 1,000 globally to now just under 7,000. So we've really gone through massive growth. We had built our client relationships, built our capabilities, and 2024 was a year of investment for us. We invested in, or 23 and 24, I should say, is a year of investment for us. We built out a growth team. We built out a centers of innovation team. We focused on generative AI as a transformative technology that our clients and we would want to use. So we are investing significantly in that. But that was the chapter that took us to that sort of 4x growth. The next chapter, we want to double our revenue from where we are today to where we will get to, let's say, over the next 2 or 3 years. And to do that requires a different set of skill sets. It requires us to be completely buttoned up internally. And that's really the priority at our place right now. That's my role over the next 12 months. I know there's a question coming up on that. Role over the next 12, 18, 24 months is really to bring a lot of those pieces together that had come in, make sure they work well, and grow the business and make it grow profitably over the next 12, 24, 40 years.
Will you be in some way reorganizing finance, the function itself?
Yeah.
Are there certain pieces that you're pulling into place? What would you share?
So, interestingly enough, the finance team when I joined Orion, is probably in really, really good shape. And that's not normally the case. It wasn't the case when I joined my prior company. We had to essentially bottom up build that finance team up. Here, it's completely different. The controllership is very strong across the globe. We have a very good FP&A team. We have people that really understand the business, know how it works, evaluate clients well. We can put out financials. This may not be the ultimate goal, but we can put out financials within 10 to 15 days, which is not awesome, but it's also not terrible. Certainly not public company, but not bad. What we are lacking is a common set of processes, a common set of systems across the globe, and the ability to then support our business in a uniform way wherever you are. So if you're a leader in Europe, or if you're a leader in Mexico or in the US and you look for some information, it's provided to you on a like-for-like, KPIs are managed appropriately, etc. basis. So we need to get the systems and the processes in place. And to do that, what we're doing right now is we're implementing an ERP tool. We're implementing our own homegrown PSA tool because we kind of eat our own dog food. And by the way, it's a fantastic tool. If there are any services CFOs out there looking to replace their PSA tool, happy to take a call. Hope you don't mind the plug. We are implementing an HRIS system globally. We're implementing a Concur travel and expense tool. So there's a lot of tools that we're implementing right now that are going to allow all of my finance team to work on the same platform with the same processes, so that there is complete visibility and transparency in terms of what the business is doing. The idea is to build that framework so that we can support the growth to that 2x number that I talked about, right? So to answer your first question, which was, am I going to reorganize the finance team? No. The finance team is running well. My objective in life in general is, if it's going well, don't change it. Like, don't change things just for the sake of change. That doesn't make sense. Figure out how we can free up resources within the finance team by implementing these systems and processes, and then reuse those resources to do something that is more value add. The way I think about our finance function and I'll talk about this a little bit later on as well, is that we are a service provider to our clients. Our clients are the other people in the organization, right? Whether you have a payroll query or whether you have a client query or one of our clients wants to understand the invoicing, we've got to be responsive to that. We've got to make sure that that is not a pain point. And the amount of times I've heard clients say, hey, listen, if you guys don't get your invoicing right, we're going to move away to another provider. That would kill me. It would be a horrible thing to lose an account because finance can't get invoicing done right. We're not there, just to be clear. But that is what I want to make sure we get at. So it's not reorganizing, it's making sure that our systems and processes are aligned with where we want to take the business.
What about as far as the numbers or the metrics that matter? As you said, you'd like to have all the organization should be sharing the similar KPIs and making certain they can understand how you double the size of the business. Is there a particular metric that you have sought to raise the profile of? Is there a particular metric that you're trying to educate the organization better about? Or maybe it's just part of the organization needs to understand better. Is there something you can share with us in terms of how you're either raising or changing the mix of metrics?
Happy to do that. I mean, I'm thinking about this as you sort of asked the question, I thought about something different than what I thought about talking about. I will talk about that as well. But there's external or impactful metrics to a group of people that are like the stakeholders of the business, and there's metrics that affect how the team performs. So let me talk about the first one initially. So if you think about our stakeholders, right, we're privately owned, but we're private equity owned. We all know what that means. You've got to look at the valuation of the company, and we have to do things to improve the value of the business, right? And having been an investment banker for 25 years or whatever, I know what drives valuation. I understand how you can position businesses, and all the esoteric stuff helps. But at the end of the day, if your metrics aren't right, then you won't get the right value. So what are those metrics? It's pretty straightforward. It's really what's the growth rate in the business? How have you been growing within the key geographies and verticals that you're looking at? What's the margin in the business at the gross profit level? Excuse me, Jack. What's the margin in the business at the gross profit level by client? Has that been growing? Has it been declining? If it's been declining, why? What's the story? Maybe you're doubling revenue and you're giving up a little bit of margin to get that. Okay, let's get that right. What's the SG&A spend as a percentage of total revenue? What's the SG&A as a percentage of EBIT, as a percentage of GP? And if you think about the P&L statement, if you can figure those things out, you know what your EBITDA is. And all of our businesses are valued on an EBITDA multiple basis. So explaining to people that, yeah, you may have it in your budget for 2024 or 2025, but spend smart. Like, don't just spend because you have it in your budget. Like, don't go and hire that sixth person if you don't need that person. And I have a reason for that as well. It's not just about the money. But if you need the person, then hire them. And that brings me to my second sort of KPI piece, which is more internal and introspective. And one of the things that we did at my previous job was looking at the finance team or looking at any operations internal facing team as no different than sales or marketing, and essentially doing QBRs, right? So what we would do is we wouldn't do it quarterly, we would do it half yearly. So it was like an HBR, and we would get all of the people that worked in the finance team one level below me. So folks that did the consolidation, folks that did the AR, AP, expenses, payroll, legal, we would have them come in and talk about their business with quantifiable metrics, right? So we had a list of, I'd say, 3 to 5 key metrics for each of those folks. We would track them monthly, and we would ask them, like, why is it suddenly taking 8 days to close AP or 9 days to close AP? And they'd say, oh, well, our invoice volume went up from 1,200 to 2,000. I'm making the numbers up just to be clear, but giving you an example, and then saying, okay, maybe you need to go hire someone, right? Because we can't have AP closing 9 days late, because then it affects my working capital cycle, which is probably worth the investment in putting that person in. So allowing people to look at their own business or own, I should call it a business, but own territory in a way in which it makes sense for them is to say, okay, you have the ability to invest now. Let's get someone. On the other hand, it could just be you're still doing 1,200 invoices and it's no change, but the complication is that the business has changed slightly and each invoice went from 1 page to 15 pages and you're entering everything in manually. Okay, maybe you need to put some automation in. So unless you look at the business from a metrics perspective and, pick the right metrics and it doesn't have to be overly complicated and track it, you won't know what that is. And by the way, these HBRs, we would have the teams present to the management team, right? So this is the executive leadership team, the CEO, it would obviously be myself, the COO, our head of HR, head of marketing. They would ask questions. And what it did, it gave my team a huge amount of ownership around things that they were doing because it gave visibility into their issues at the very highest level. It gave them a great sense of pride that it wasn't like they were this little organization hidden away, no one cared about. It brought them to the forefront, and I'll never forget this. It was a comment that a woman that worked in our sales team. She'd been there before me. Love this woman. She's awesome. She'll know if she listens to this. She'll know who I'm talking about. And she came up to me and she told me. She was very nervous before the first HBR because, you kind of pulled out of your comfort zone. And she did that. And by the way, all her team was on the phone listening in, right? So they weren't in there in person, but she was in person in New York presenting to the essentially the management team. And she did a great job. And of course, I'm not going to let them, she whenever she was like going off track, I sort of bring her back on track. And she did a fantastic job. And she was like, I'm so glad I did that. It really helped me understand that, I'm not alone and we are not alone. And it was more valuable to her than a 50% raise would have been. Not that I was going to give her a 50% raise, but you know what I mean. So to me, it's KPIs on both sides, right? It's like keeping your external stakeholders happy and figuring out what's going to drive this business. Like what is on brand for us? How are we going to sell this company? What are buyers going to look at? What are they going to value us with? And then focus maniacally on that, which we do and everyone does. All of your listeners will have that. And then the second is really internally. How do we keep our teams happy and make sure that people understand that, okay, we should be investing or we should not be investing? Why do we have 5 people doing AP when we get 20 invoices a month? Like, what are they doing? And it's not meant to be a bad conversation, because this was the last thing I'm going to say on this is, when you have employees that aren't doing work, or when you have employees or colleagues that are basically 30% occupied, it's not a good thing for them, right? It's definitely not a good thing for the business because we can all figure out the math on that, but it's not good for them because at some stage, they're going to have to figure something else out. And it's much tougher to go find another position if when someone asks you, so Jack, what have you been doing for the last 6 years? And you're like, oh, well, I wasn't doing that much. It's tough because skills atrophy, knowledge atrophies. If you're not challenging yourself every day, you will be going backwards. And so that's what I want to do. So it's not fair on those people. And it's also not fair bringing people in if you don't think you have enough work for them.
Nice. Many insights there for us, Cyrus. Thank you for those. Want to just quickly touch on AI with you. Wondering if, let me ask if AI is contributing in some way to your finance function or your forecasting capability, perhaps. Does AI have a role here?
The short answer is yes, but as you and your listeners have heard, I don't give short answers. So I'm going to give you a slightly more enhanced one. Look, we're super excited about what AI can do, right? We have, like I said, we have our own center of innovation around artificial intelligence. We think artificial intelligence has a role to play pretty much and touch every part of this economy. And that includes the finance function at pretty much every company out there. Every one of the big ERP systems, FP&A systems are trying to incorporate AI to different levels. Now, having said that, we're working closely with our own Gen AI team to figure out, like, what are other people doing? Like, how should we be thinking about this? But it's at the planning stage. I want to be clear with you about that. We're not jumping headfirst into trying to, AI our systems. What I want to do as a priority is get all our systems harmonized, working as one, get the ERP tools in place, get all the underlying data aligned and make sure that we have one source of truth for everything, that we're not looking at different ERP tools and things like that, right? So that's the first priority, and that's going to happen, I'd say, over the next 2 quarters at the latest. Next year, one of our priorities is to put an FP&A tool in place. And we've already started talking to a few of the companies out there that we've been tracking. And, I did the same thing at my prior company. We used a different tool. This time we might use a different one. But it's really those FP&A tools have now started incorporating elements of artificial intelligence, making it intuitive as I see it right now, making it intuitive to get answers from your data. I think that can go a lot further. And one of the things that I want to see it go to, and this is to your point, you mentioned the word forecasting, is giving me a future view of where revenue is going to go, right? Our business is relatively predictable, but it is not fully predictable in the sense I cannot tell you down to the dollar what I'm going to do in Q3 next year. It just won't happen. So what I would love to see, and I've seen demos of this, we have a ton of data, right? So once we get the data right, we have our CRM data, we have our conversion metrics, we have our actual SOPO and PSA data, we have our hours from the system, because that's what we do. It's hours multiplied by rate. And then we have our billing. With all of that and a very recurring client base, I should be able to tell my management team, hey, 3 quarters out, the probability of us hitting this range of revenue, hopefully not a very big range, this range of revenue is pretty high. And this range of revenue is a little bit lower, but so on and so forth. And if I think about it sort of visually, when we have, unfortunately, when we have hurricanes and you watch the news, and they say, well, if the hurricane, the wind blows a little this way, and the hurricane is going to go through this path. And if it does it slightly differently, it'll be up here, and then, or it could be even down here. And as you get closer to the date, you know exactly which way it's going to go. And that's kind of how I want to see our forecasting capability be developed. But that is truly into 2025 territory, not 2024. 24 is priority systems, process, ERP, getting everything set up. No excuses going into 25.
Great. Nice overview for us there as well. So thank you for that. We are up to what we refer to as our finance strategic moment question. And again, this could have happened anytime during your career. Cyrus, we're looking for a good story from your past. What comes to mind when we ask for a finance strategic moment?
Yeah, I have a bunch of stories here, but I'm going to focus on one of them. So, when I thought about finance previously, I always thought finance was a backward-looking function, right? In the sense you look at what you did and then you sort of record it and you come back and say, hey, we did so and so. And that's fine. That is a critical part of what we do, but really where I think finance can truly be transformative and truly be a partner to the business, which is what I think it should be. It has to be a partner to the business, is when finance helps the business make strategic decisions. And I'll just use a straight example or a story as you sort of described it. When in my previous job, one of the hot buttons was really, how do we pay people on their on commissions, right? Commissions can be one of those things where if you don't structure compensation right, it can drive the wrong behavior, and B, it can not be a fair sort of exchange of value between the company and the person, our company and the people. And so one of the things that we found was there was a disconnect between the way in which our salespeople were paid for some of the services revenue that they were generating, not in our current business, in one of the prior companies that I worked with. And there was also a disconnect between how the delivery people were paid. So all the salespeople cared about was, hey, I got to get top line. If I get top line, I get paid, so I'm good. And all the delivery people cared about was, I want to put as many people as possible on this job so my utilization metrics look good and everything else looks good, right? So there was this disconnect where the salesperson would be like, hey, I'm going to try and get some more revenue, but the delivery guy is trying to load as much cost as possible. So what happens in the middle, once I've paid commissions to everyone, it could be that we might have, loss-making projects that have not been well thought out. So we thought about that as a team, and we're like, okay, what's the ideal, right? The ideal is what we want to give people is the ability to earn the same amount of money or more, but we want them to give us something. So we told the sales guys, listen, we're going to get you metrics around everything, and you're going to be able to trust them because we're going to publish them. It's going to be transparent. and we want you guys to be involved in this. But what we want you to do is go and sell as much revenue, but sell it at the right profit margin. Like sell it with the right people, consult with delivery, make sure that delivery buys into what you're selling and price it correctly. And then if you have pricing leverage with your client, go get a little more. If you can do that and you get to the target margin, we'll give you more, a little bit more than what you were getting before. But if you can get a higher margin, we'll share more with you. No problem. But if you get it at a lower margin, we're going to take money away from you. So it wasn't just all give. It was like, hey, you guys are all adults. And they're all pretty smart guys. You know how to sell. Go sell well. Go consult with your delivery teams and make sure that you're not just selling stuff and giving things away. And we told the delivery folks, we want you to think about this as your business. If you were running a one-man shop, not literally, but if you were running a one-man shop, how would you use your resources? How many projects would you take on? How much time would you spend on each one? And think about those metrics. And then we had the systems built already that allowed everyone to see the data completely transparently. So there was full trust in what we were providing them from a finance team perspective, which was absolutely critical, because imagine if I put all these things in and then the data just wasn't there, or the data did not make sense. There would be a lack of trust. There would be a complete breakdown in how the businesses were aligned. And so finance was completely transformative in that moment. And I wouldn't say it was just finance. It was finance and operations, delivery, the sales team, the sales leadership, our CEO and the COO, all of us working together to put these plans together. And what happened? The net result, right? So you'd be like, so what? What's the big deal with that? What happened is when I joined the business, our margins on one part of our business were roughly 20%. And by the time we sold the business last year, they were double that. So significant increase in overall GP in that business line. And by the way, this was with us paying more commissions than we would have paid, because we got salespeople aligned well. And every year we would pay more to the delivery folks as well. So it just took away all sorts of issues from the business about, hey man, inflation's up. I need to get my eggs and I need whatever, 3% more. It's like, no, you got 15% more on your bonus last year because you did so well. Keep doing that. Now, if you want to take on more responsibility and you want to move up in life and you want to get a promotion and you want to, that was a clear transformative or strategic moment for me, that finance plays a role in the future of the business way more than we think it does. And if we're not participating in that, we're just along for the ride.
You know the feeling. A report deadline is looming, and your team is buried in spreadsheets with tasks like bank and payment processor reconciliations, journal entry prep, and cash flow reporting. But what if there was a better way? Ledge automates the tedious work that slows your team down, like high-volume transaction matching, journal entry creation, and even cash flow forecasting. Ledge glues all of your financial data together across your ERP, banks, payment processors, data warehouse, and more, and automates any workflow, no matter how complex or unique to your business. Get real-time cash flow visibility and make cash reporting and forecasting effortless while increasing controls and accuracy. And Ledge requires no IT or R&D resources. Ledge plugs right into your existing stack, so you can get set up in just a few hours. Imagine a world where your team can close the books faster with fewer resources. Imagine audit-ready data all year round. With Ledge, you can finally stop scaling headcount just to keep up with growth. Visit ledge.co, that's ledge.co, to learn more about how you can automate your finance operations without the heavy lift. Nice. Thank you for that. We are going to move to what we refer to as our mentoring round. We want you to think when you first entered the C-suite, that first 60 days, something surprised you about the role itself. You had observed finance leaders for years, but this was the first time you actually were the CFO. Maybe it was because someone approached you and you had to stop and think, really, this is something I'm involved with? I don't know what it might be, Cyrus, but something about the role that might have surprised you, even though so many aspects of it were familiar to you?
I think the biggest thing that I had to realize moving from basically a consulting investment banking kind of job to the CFO role is the buck kind of stops with you. If you don't manage cash carefully and you can't make payroll, that is a big, 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 big issue. Maybe I should have added a few more bigs because that is, trust destroying and everything else, right? So it has to be, it is more tactical at some stages than you may want it to be, but it is absolutely critical that you do that. And that is something that I learned very quickly as I got into that role. You gotta have your numbers in your head, and you have to have your hand on a lot of things. Like I used to check the bank balance. I still do, like maybe 2-3 times a day. Not because I'm expecting to see something crazy, but because I want to make sure that I know exactly where things are on critical aspects. Like I know what my 13-week cash flow looks like down to the dollar. And that is something that I wasn't fully expecting. But it is quite enjoyable to me. I like getting into the details, so I don't have a problem with that. So that's what was very different.
We like to ask our guests to reflect a little on the personal side. We're wondering if there's something your colleagues might not even know about you, something, an interest you have, something on the personal side. Anything you'd share with us?
Yeah,
You
absolutely.
have
I
family
would love
members
to.
back in India. We know that.
Yeah, I do have family members back in India. But look, from a personal side, I have a passion for cooking. I think I'm good at it as well. So I don't generally tend to find people leave and then not come back. I love cooking Indian food, whatever I can think of. I'll be cooking for Thanksgiving as well. And to me, it's like nothing beats go to like the farmer's market or going for a little shop and buying the stuff and then creating something from scratch that people truly enjoy. You get some friends and family over, and you have a meal over over a couple of hours. It's quite nice. I have 2 grown children, they're 21 and 19, and what I found is when I generally tend to do that, they hang around. Otherwise, they're out with their friends. So that's that's a good thing. And my friends' kids come over as well. So I think that's great. It keeps us together.
What is the most underrated spice, in your opinion?
Ooh,
If we were to look at your spice rack, what is the most underrated?
so it's an Indian spice. I don't know what the English translation for it is, but it's called kasuri methi. And essentially, if you've gone to an Indian restaurant, as I'm sure you have, and if you've eaten any sort of chicken tikka masala kind of dish, without that spice, you would know there's something missing. Well, I can send you a text with the name if you want to pick some up. And then the other thing that I would tell you about myself is I'm a huge, passionate Formula One fan. And I know it's kind of picking up, it's picking up interest in the US. We now have 3 races in the US and 2 additional races in North America. We have Brazil as well. So I love Formula One, and I've loved it for the last 30
Was
years.
KPMG a sponsor of Formula One, or am I getting confused? Or
No,
were they?
no, you're not wrong. They sponsored many years ago. They sponsored McLaren. There was a technology sponsor, but I think it was only for a year.
What about a book that's influenced you in some way, or a resource that you turn to? Anything you would share?
Oh yeah,
For us?
100%. So there's 2 books that I read a long time ago that truly influenced how I think about businesses, and were more focused on why I got into investment banking. But I feel both of those are relevant to today as well. One is it's a book on valuation written by Ashwath Damodaran. Ashwath Damodaran is a professor at NYU, very smart guy. The book is a little dry. It's not something that you're going to flip through on a weekend and get excited about, but it sets out very clearly how different companies are valued, how people value different companies, right? So at the end of the day, it comes back to what I said, I think, at the start, which is if we are working on behalf of our stakeholders, we have to think about like, how do we generate value for our shareholders? How do we generate value for our people, lenders? How do we make this a better business by making it more valuable? And that book sets out all the metrics that you need to think about. And it's a good study. I still have it on my shelf at home. And I flip it open once in a while, but I have a good sense of what drives valuations in the businesses that I focus on. So that was more sort of factual, theoretical knowledge. And the other book is a book called Barbarians at the Gate. It's written by Brian Burrows and John Haliow, sorry. And it's about the hostile takeover by KKR of Nabisco, which is a biscuit company, or was a biscuit company, I don't know. And it was actually not a great deal for KKR. What that taught me is that, egos play a role in M&A. So you can do all the valuation work that you want, and that's great. You can have a theoretical document that says the value is between yay and yay, and that's great. But if someone really, really, really wants to buy your business, they don't care about that. So there is an emotional aspect, there is an emotive aspect of how you do deals. And that is something that I learned through that book. It's quite interesting. If anyone ever wants to read it, it's definitely a good read. Quite exciting. And the beauty of it is I read that book before I moved to the US. And one of the firms, the law firms, Skate and Ops, that was involved in that deal was 2 blocks from my office when I moved here on Bryant Park. So, it ties it off together.
No, it's a classic now. It was a bestseller for years. Hey, I seem to think they made a movie of it at some point in time. They might have made a miniseries or something.
Yeah.
So great choice for us. Haven't heard it for a while, like years, but great one for us. Thank you for that. We're up to our final question where we ask you to look forward. And what we want to know, Cyrus, are your CFO priorities for the coming 12 months. What would those be?
Kind of covered all of them before, but I'll recap them for you right now. It's really getting the systems, processes, the ERP tool, all of that really working well. It's making sure that my people are happy and making sure that they have a clear path to where they can progress. My view about people that work with me is they should want my job, right? They should actively aspire to take my job. If I'm doing that and they're doing that, we're in a great spot. And so that's what I want to do. And if they have needs or learnings and things like that, or exposure, sometimes it's just exposure. Hey, get on this call with me and just listen in. Don't say anything. Just listen in to what's happening, because just that gives people the ability to say, hey, I did that and it's not that difficult and you can do it. Listen, everyone that works with me is smarter than me. That's always going to be the case. That way I can chill and they can work. But it has to be the way. And then really bringing together this One Orion aspect, that's the immediate priorities, those 3, systems, people, and One Orion. And then practically speaking, I do want to put the FP&A tool in next year. I want to get a much better handle on our ability to forecast, because if we can do that, we can guide the business so much better in terms of making investments, getting people on board, where are we going to grow, what are we going to do, things like that. So that's my priorities.
Great moment in time to catch up with Cyrus Lam. Thank you, Cyrus, for joining us on CFO Thought Leader.
Thank you, Jack.
Hello, everyone. Jack here. Hope you've been enjoying our recent episodes of CFO Thought Leader. Please know that I don't take for granted this opportunity to serve you. Your time is valuable, and of course, so is the time of our CFO guests. I'll admit to you on certain weeks, I will pinch myself and say, hey, I get to do this for a living. I speak to all these impressive leaders. Undoubtedly, there are more aggressive interviewers out there, some who leave no stone unturned. But our swim lane is for finance leaders only. And those finance leaders have a unique style of leadership, one that is rooted in the burden of trust. In light of this, finance leaders must take great care not to forfeit this trust as they step into the role of being a more expressive leader. And that is what CFO Thought Leader is really about. That's why I try to remind myself week in, week out, how fortunate I am. Still, I need your help. Tell us what we're doing right. Tell us what we're doing wrong. Email me your comments at jack@cfothoughtleader.com. And please visit cfothoughtleader.com. You'll find a listener survey right on the nav bar. As always, Thank you for listening.